Thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We get into explain what's driving mortgage rates on any given day. It could be impacted by the economic calendar or a combination of that with headline news and or geopolitical. Sometimes the market sentiment changes, and if you're sitting on the sideline, you may not understand what's going on. So we're trying to give you the best explanation as possible as to what investors are thinking and what they're looking for, and why maybe good news is now bad news, or vice versa. Try to give you that explanation, so that way, if you're looking to refinance or purchase, you can hopefully make an informed decision for yourself. We're here to help you guys. Uh, a little bit about myself: I am a mortgage loan originator. We do work with the national lenders. We do loans in all 50 states. So we'd love to be able to talk to you about your refinance or purchase needs. But more than that, we'd like to be a resource for you folks. So if you guys got questions about anything, please reach out. We are here to help. Without further ado, we'll jump right into the report. We'll start off with the economic calendar. We got two items here, and we'll start off. The first one is existing home sales for the month of February. So January, it was at 6.5 million in seasonally adjusted units. However, that got slightly revised lower to 6.49. Forecast is kind of for a drop to 6.1, and it dropped even further to 6.02. So that's a 7.2% drop month over month. And then we also got leading index. The leading index. This kind of gives us a short-term range as to what they're expecting in the economy. Uh, so it's like usually about 6 months. So January, it was revised actually further. It went from negative zero point 0.3 to minus a half a percent. That was month over month, so it worsened. And then forecast is kind of for 0.3%, and it came in at 0.3% for the month of February. So economy is starting to pick up a little bit at that time. But if you remember, January was also, we had the Omicron, so a lot of things got shut down there. So that's probably why we had a month over month a drop in the month of January for leading index. Now, headline news, we've had a few comments. We're still kind of looking at the Ukraine Russia war. There's been reports that Russia has been bombing Lviv, which is a westernmost city near the border of Poland. And of course, that is getting a little close to a NATO. Poland, if you're not aware, it was a NATO country, so that's getting a little close. But to move aside from that, investors aren't totally looking at that today. We are getting a few members of from the Fed speaking today. They had voiced their opinions of wanting 0.5% increases. We had from Waller, who would like to see us get above his what they call the neutral level, or uh, neutral stance, and that would be above the 2 and 2.25% range, is what he's estimating. He thinks we should be above that. Wasn't he kind of was in favor of 0.5% until we got the geopolitical, which was the Ukraine-Russia war. Okay, so for the first hike, so he went with a quarter, but he is looking probably to do 0.5% at some point this year, or multiple 0.5% increases. And then you got Bullard, who would like to see us above at least by 3% by end of this year, and he himself has advocated for 0.5%. So he was the lone person that won 0.5% this last rate hike. Uh, but he's going to be pushing for 0.5% increases. So look to that coming in the near future. We could see some higher than normal rate hikes coming up here. Um, so that didn't have as much of an impact. Well, it had a little bit of impact. It helped the mortgage-backed securities. We were up about. We'll take a look at this here. We were actually up about 25 basis points. So a lot of lenders came in with repricing for the better as a result of that. And over the last 30, 40 minutes, we'll kind of take a look here. Over the last about 40 minutes, right about here, so we saw this deep drop. Now we're only up 8 basis points. So we saw a pretty big drop here from where we were at the height of about 25 basis points, now down to about being up 8 basis points. So that could potentially, depending on if we stay there, some lenders could come back to repricing for the worse, go back basically back to where we were prior prior to that. So pricing should be still a little bit better than what we saw yesterday. We ended up closing up 30 basis points yesterday, which is good news after being seeing for a couple weeks here, just straight downward spiral. Hopefully we found a floor, and hopefully we can climb back a little bit and regain some of that. But as of right now, we're up 8 basis points. And then rate on the yields, we're up at 2.15 range as well. So we're down slightly in terms of the yields, treasury yields. So lastly, we'll touch on is the average rate for a conforming loan limit. This probably of no surprise, but they are increasing, and the 30-year fix is now at 4.5%, and the 15-year is at 3.88% here. So again, these do have points built into them. They're usually points built into them, and of course, these just kind of give you a little basis as kind of roughly where the average rate is currently. So obviously, whatever rate you get quoted could be different from what the average rate is here. And again, these do have points built into them. All right, folks. If you guys got any questions, please reach out. We're here to help you guys out. If you like these videos, please help us out and share and like the videos. We greatly appreciate it. And subscribe. We'd love to be able to keep you in the community, and we do appreciate you guys. Thanks so much for watching. Oh, another side note is I won't be doing these. I won't be able to see you guys until Wednesday. So Monday and Tuesday I will be tied up. Won't be able to do these videos for you folks. So on Wednesday is when I'll do my next video next week. All right, you guys have a great rest of your week, the rest of your day. Enjoy your weekend, and then I'll catch you guys on Wednesday. Thanks for watching. Bye bye.